Barks Alpha here, by the seaside, reporting for Newshound with your 24-hour crypto news roundup. On today's bulletin, the $400 billion crash, the 500 million handshake, Ethereum staking hits 30%, January predictions smash $12 billion, and Jupiter brings Polymarket to Solana. Let's dig. The cryptocurrency market saw a staggering $400 billion erased from the total market cap in a single week. According to data compiled by Finbold, the valuation of the entire asset class tumbled from $2.95 trillion to approximately $2.56 trillion as of February 2nd. While Bitcoin shed 11%, Ethereum took a much harder hit, diving nearly 21%. Analysts point to a perfect storm of macroeconomic instability, including a high-stakes power struggle between the White House and the Federal Reserve, and the surprising nomination of Kevin Warsh as chair. Most alarmingly, the bloodbath is part of a rare simultaneous collapse of both risk-on assets like tech stocks and traditional safe havens like gold and silver, which lost an estimated $8 trillion in the same window. Next up, according to an investigative report by the Wall Street Journal, a mysterious Abu Dhabi-based investment vehicle finalized a deal to acquire a near-controlling interest in World Liberty Financial, the digital asset venture tied to the Trump family, just days before the 2025 presidential inauguration. The transaction, signed in mid-January 2025, involved Aryam Investment One, a fund reportedly backed by Sheikh Tahnoon bin Zayed Al Nahyan. The disclosure of this $500 million capital injection reveals that the startup's financial foundation was effectively solidified by foreign interests at the exact moment the administration's new regulatory and economic policies were being drafted. Following on, the report mentions that Sheikh Tahnoon has been the primary architect of the UAE's strategy to transform into a worldwide leader in high-performance computing and artificial intelligence, and that following several discussions between the Sheikh and senior American officials, the administration pledged to supply the UAE with hundreds of thousands of sophisticated AI processors each year. In other news, Ethereum has reached a major structural milestone, with over 30% of its total supply now locked in staking. On-chain data reveals that the total volume of staked ETH has surged to 36.6 million tokens, fueled largely by a massive influx of institutional capital from ETFs and treasury firms. This record-breaking participation comes just as Lido v3 launches its new Saint Vaults feature, allowing for more customizable validator configurations. Despite the network's security success, Ethereum creator Vitalik Buterin has signaled a strategic shift toward mild austerity for the Ethereum Foundation. The move is designed to help the organization sustain an aggressive roadmap for scalability and decentralization over the next 5 years, while remaining financially resilient. On to predictions markets now, and the industry for decentralized forecasting has reached a staggering new peak, processing a record $12 billion in volume during the month of January. The surge in activity was largely catalyzed by Coinbase officially launching its own regulated trading platform for U.S. users, bringing mainstream institutional liquidity to a sector previously dominated by offshore players. By providing a compliant bridge for Americans to bet on everything from economic data to geopolitical events, the exchange has helped transform prediction markets from a niche crypto experiment into a high-stakes financial powerhouse. Speaking of which, in a major move to unify decentralized finance and event-based speculation, Jupiter has announced a direct integration with Polymarket, bringing on-chain prediction trading natively to the Solana ecosystem. Users can now browse and take positions on everything from macro releases to sports and culture directly within the Jupiter app, eliminating the need to bridge assets or switch platforms. The rollout coincides with a strategic $35 million investment from Parify Capital, aimed at accelerating Jupiter's infrastructure as it targets high-frequency traders. With Jupiter's TVL hovering near $2.35 billion and annualized fees approaching $650 million, the platform's leadership is positioning this predictions layer as a core growth pillar for 2026, further cementing Solana's role as a leading venue for consumer-facing digital finance. That's it for today, dogs. Remember to share with the pack. Keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound, this is Barks Alpha. Yes, I do.